Welcome back. Time now for top picks from Paul Harris. Number one, Apple, one of the most prominent stocks in the North American stock market, and a stock that we have received thousands of questions on over the years.
Right. So Apple, for us, is I think one of the things is that I think the people are, the headwinds that Apple's are facing right now, to me, is very transitory. A lot of it is tied into their on the phones, the delivery of their products through manufacturing side, through China with its lockdowns, et cetera. The stock is down 23%. This is the most it's been down since 2008, relative to the index of 18%, I guess. But I think people are missing the point. I think they're not concentrating on where the growth is coming from. One is the wearables, and the other one is the service side. I think the service side is going to be about $136 billion business by 2026. The wearables are going to be close to $70 billion. In that time period. And what I think with people with the service side is much higher margin business, and that'll smooth out the issues that they're having with kind of on the hardware side, right? So to me, that's really a good growth place. And so I think people are underestimating the ability for Apple, and they're looking at very short-term things, which I think will be solved over the next little while. So we really like it here, and we think that you should buy it.
Okay, that's top pick number one. Zoetis, going back to the pharma sector, is top pick number two, ZTS on the New York Stock Exchange.
Right, so Zoetis is a company I've recommended on the show for a long time. It's an animal healthcare company. It was spun out from Pfizer in 2013. So so in 2020, I think people spent about $20 billion on animal health. And in 2001, it was $6 billion, right? Yeah. So people are really, and especially on the pet side. So they have pets and they have livestock. Livestock grows about 5%. Had a difficult time through COVID because people weren't buying a lot of meat and stuff like that. But the pet business is really the big growth area. And pets are, it's very different for pets, right? But one is when you come up, there's no insurance to worry about, so most people pay out of pocket. Mm-hmm. Getting a drug for pets is a lot easier because you have to do less trials. They tend to use human compounds. Right. So that's one of the other things. And so it really is it's a much better business. And so now they've got a bunch of new products coming through. So we think it's a great area. We continue to see a lot of growth on the pet side. And then on the livestock side, we think there'll be some reasonable growth as we go into 2023. So we really like the company here.
Okay. And number three is Amazon, ticker symbol AMZN on the NASDAQ.
Yeah, so Amazon's
stock that has come down a long way.
Yeah, so Amazon's had a very tough year. It's down about 45%. And I think that has to do a lot of stuff to do with the fact that they ramped up a lot during COVID, and they had a lot of very high comps to meet over the next little while, so the stock has come off. E-commerce will continue to grow in our view, albeit it's going to be a difficult environment because of the macro environment for on the retail side. But we think Amazon will grab more market share wallet share from everybody. That's one thing. AWS is certainly slowing down, but we think it will continue to do well.
It's Amazon Web Services.
That's right, which is the cloud business, and I think the cloud business will continue to do well. That's not going away. More and more people have to move to the cloud. So the other thing is that they've cut their cost. They're bringing down their cost structure. So you saw that they laid off about 10,000 people, and now they stopped any hiring at the main head office. So, and the last thing is that, the big people on digital advertising have been Google and Meta, but Amazon's built an incredible business on the advertising side. And so I think we think there's lots of growth there. So a lot of the, the difficulties of the stock is already in the price of the stock. We don't see it. It may fall from here because of market, but I think this is a great opportunity to buy a great company and at a good trough multiple. And I think so that's what I'd say is, and I don't think e-commerce is going away. I don't think cloud's going away. I think advertising is going to grow quite incredibly for them. And I think they may even be bigger than Meta at some point in cloud.